Here on Business Today. Of course, I'm joined by Mentoria CEO and economist Ken Gishinga. Ken, welcome once again.
Always a pleasure.
All right. So this week, actually, we've seen a couple of different things pop up. Most notably, we've seen the shilling actually weaken, and it's been at a 10-month low. And I'm hoping we can get those figures up here for us. But as we talk about that, we've seen it at about 103 shillings. So what do you have to say on that? Why do you think it's gone to that low at this point?
Well, there are two factors at play. We have a local narrative and you have a global narrative. The local narrative is energy demands are going up. Oil prices are on the rise, and also the amount of volumes of energy that Kenyans need for economic activity is also going up. And remember, most of our import basket consists of oil. Almost 36% of our import basket is on oil and food. So that's aspect. Then there's also the global aspect of the dollar rates. Interest rates in the West are going up. So a lot of the dollars in the local economy are chasing higher yield in the United States. So I think those two narratives are coming to play, and that's why we are seeing a depreciating shilling.
Okay. We've also seen, of course, that this week we've seen pump prices go back up. Nairobi motorists will now pay 118 shillings for a litre of petrol, and the highest price in the history of petroleum consumption actually in the city. So is this once again correlated to this situation?
That's a very interesting. There's a very vicious relationship happening here, because the reason you're having oil prices go up is because you're saying there's an exchange rate movement, which means they have to spend more to buy the same amount of oil. So another thing is that we are demanding more oil, so it means we have to demand more dollars. It almost seems like we have a vicious cycle in the sense that one is leading to the other and the other is leading to the first one. So I think moving forward, we really need to think of our long-term energy strategy, because unless we have become energy dependent as a country, we'll always be at the mercy of international markets. And with that happening, we'll always be a net importer, and our currency will always be depreciating.
Okay, so there's that factor. And then, of course, the CBK data showed a depreciation of the local unit came as the official foreign exchange reserve declined by 7 billion shillings in a week, and that's 32 billion in a month. So what kind of correlation do we have there with the shilling?
Well, that tells us that the CBK has been trying to intervene in the market.
Okay.
Because when you see gross reserves coming down, it means they're trying to sell dollars into the market to stabilize the Kenya shilling dollar exchange rate. So that tells us that, yes, there is some pressure from importers, and the CBK is trying its best. And why would the CBK want to have a stable foreign exchange? Because, as I said, I've talked about the oil import narrative, but also our debt. As a country, we are servicing a lot of foreign exchange debt. So it's really in the interest of Kenya to have a stable, strong shilling against the dollar.
Okay, and as we talk about, of course, strengthening of the shilling, how can this be done? Once again, what factors need to come into play now to sort of bolster it?
Well, you have to look at the supply side of dollars. Where do we get dollars in this economy? What are the major sources of dollars into this economy? It's diaspora remittances, it's tourism, it's horticulture, tea and coffee. So it's really boosting our export markets. Really, remember last week we had the president going to China to really try and market Kenyan produce. That is how you earn dollars into the economy. So we really have to, I mean, diaspora remittances, you can't control that, but things around tourism, you can try and attract more tourism. You can try and find more markets for your coffee, for your tea, and hopefully that can be able to assist you in terms of managing your dollar reserves.
Okay, and as we talk about that, you did touch on the president's visit to China. Of course, there was the China International Import Expo that happened in Shanghai recently, and we do know there was a signature of the Memorandum of Understanding between China and Kenya. And when it comes to, of course, the import exports and this sort of bolstering situation, what do you have to say about what we came out with from that entire experience as a country?
I think it was a historic move, because for the longest time we complained about China selling a lot of products to Kenya and Kenya not selling enough to China. So I think China has realized this, and that's the reason they had the world's first import conference, because they realized it's important China to also be opening its market to the rest of the world. For Kenya specifically, I think the avocado sector did really well, because Kenya was able to sign agreements on what they call phytosanitary standards. One of the reasons Kenya doesn't sell enough agricultural produce to China is because historically we've not been able to meet the right sanitary standards. Now we have the technical assistance, they've signed the agreement, so we should see a lot more horticultural products going into China.
Okay, and as we still keep with that, do you think that Kenya has a lot of competitors when it comes to exporting goods to China within the region?
Absolutely. I mean, just taking avocado as an example, South Africa is the largest exporter of avocado in Africa. Kenya is just overtaking South Africa.
Yes.
South Africa obviously has a bigger economic base. So Kenya has a big advantage in the sense that from a tourism perspective, but even from an agricultural perspective, we have the best. Kenya is the largest black tea producer. So there's no reason why Kenyan tea should not be consumed in China. So I think it's just been a matter of getting the right certifications to be able to market our goods abroad. I think that's what's been lacking, and I think that's what has been resolved right now.
Okay, so especially when it comes to, following certain procedures and making sure we're up to standard and we meet all those international requirements to be able to cash in on that. But as we still look at the international side of things, we've seen, of course, Kenya's relation with China, but also it's very much related to Kenya's relationship with the U.S. And we saw that direct KQ flight. We had a lot of, excitement. But this week, we've seen them reduce the number of flights in the winter period, the direct flights from Kenya to the United States. And they say this continues all the way to March because of the low uptake during the winter period. And we've already seen their stocks have an impact due to this week. What do you have to say about that?
I think just the economics come into play. You're right, they've cancelled about 10 flights between now and March. So absolutely, I think they're starting to realize that this is going to be a very competitive route, and it's going to take a lot more time to be able to build traction. That said, I've always thought Kenya's real advantage is in intra-Africa trade. I think KQ will be launching a direct flight to Mogadishu.
Yes.
But nobody's talking about that. And
Yes.
Mogadishu is the third largest market for Kenya's produce. So I think sometimes our orientation is towards the big markets, but the reality of the shillings and the cents is actually we have a lot more opportunity in the East Africa, in the African market. And Kenya Airways has really been the Pan-African flight.
Yes.
So in as much as China and the US are good, attractive destinations to show on paper, I think the real future of KQ will be connecting Nairobi to the African capitals.
So inter-African development and bolstering within our continent itself. When we talk about inter-African trade, and let's move away now from the international scene, as you've said, what are some of the top products then that Kenya trades with our region within itself?
I mean, if you look at, take a market like Tanzania and Uganda, obviously we have our horticultural,
Yes.
some of our horticultural material, but also things around tea and coffee are still consumed within Kampala and Dar es Salaam. Livestock is a major demand in Somalia and Mogadishu. People don't talk about the livestock market and the demand for the livestock market. So I think when President Uhuru Kenyatta signed the Africa Continental Free Trade Agreement a few months ago, the idea was to make Kenya to be able to export its rich agricultural produce to the rest of Africa. And I think that's starting to settle in. And I think we are going to see a lot more of that in the next few years.
Okay, so let's come back to one of the other top stories that we had this week, which was the CBK. As they've said today, they're going to go ahead with fining those 5 banks that were seen to have been transacting the fraudulent NYS money. And we've also seen the reasons for this fine are failing to report large cash transactions, among others, like undertaking adequate customer due diligence, lacking supporting documentation. And these 5 banks are going to be paying quite some hefty fines.
Absolutely, $392 million. That's not small money, but also if you compare it to the profitability, it's still within reasonable bounds. But if you really think about it, CBK is saying these banks can do better due diligence. They can do what they call KYC, know your customers. But the banks, on the other hand, are saying the policing work of banking should be done by the central bank. This is central bank trying to push oversight work to commercial banks, because commercial banks are in the business of transacting. One of the allegations they are saying right there was some accounts were open before NYS funds were accredited into those accounts. But if you really think about it, it's very unlikely to open an account and not fund that account. So that really can't be an allegation. So I think the banks are saying, leave us to do the buying and selling of in the economy.
Yes.
CBK do the oversight, and this feels like CBK is trying to sort of ask banks to do more oversight, which is CBK's role, because banks, if they end up being policing, when will they do their day-to-day transactional activities? So I think it's a big debate that they need to sit down and really agree, where does oversight of large transactions, that is not necessarily a crime to have large transaction move within banks, have large transactions every day. That's the nature of commercial banking. So I think there needs to be a deeper understanding on whose role is to do what. And I think the better they can do that, the less likely we'll see a lot of this kind of to and fro.
Okay, so it's more of shouldering the blame, who takes it, and a bit of a blame game, if you would say.
Precisely.
So we've seen, of course, these 5 banks, including Cooperative, we've seen Equity, DTB, KCB, and more, the 5 of which who have been, signaled out and picked and said, okay, you transacted this much, you'll be fined this much. And of course, mid-September, they did not agree to it. They said, we've been requested, but, their defensive mechanism didn't seem to work, as CBK has announced today. But still keeping it with the banking sector, on our Trading Bell show, this afternoon, actually, what comes up next, we'll be talking to the Kenya Bankers Association CEO, Habil Olaka, and we were talking about the rate cap as well when it comes to affecting the banking sector. And we've seen that they're more willing to lend to government and corporates, and SMEs are suffering as a result.
Absolutely. I mean, I looked at Equity Bank's numbers. They have a liquidity ratio of 58%. Meaning a lot of their money is going into government securities. And for them, it makes sense for them because it's difficult to lend to the real economy at the same rate as the government rate. So I think for them, it's in the interest that caps are removed so that they can be able to price risk adequately. I think that's what's not happening. That said, they are still making more profit. I mean, the profit numbers have been up and up. We saw COP 10 billion. We're seeing KCB almost 18 billion, Equity Bank. So their numbers are looking good, but who's really hurting? It's the SME, because the SME is not getting access to funding. It's the farmers. We've talked about how agriculture in Kenya is the least funded sector, yet it's the largest sector of the economy. So if these banks are continuously parking their money in government bonds and bills, who's going to finance the farmer? Who's going to finance the SME? Those are the questions I think they need to answer with the regulator.
So there's so much interrelation between the banking sector and so many other parts of life, so many other traders, so many other businesses, of course. And one of them, as you touched on, agriculture being. And Twiga Group, of course, did something quite amazing this week, as we've seen. You wanted to tell me about more about that.
Yeah, we are seeing a major injection from the IFC into Twiga Foods. I think Twiga Foods is becoming one of the more disruptive thinkers in agribusiness sector, really trying to organize farmers in a way that banks can interact with them, because banks don't lend to farming because they say it's very disorganized, it's very risky. Now, Twiga is in the business of really organizing how pricing structures are organized. So I think it's interesting that IFC is funding this. I would have loved to see commercial banks funding this more because we talked about it last week. If money does not come from the commercial banking space, it's going to come from donors, it's going to come from private equity, it's going to come from multilateral agencies, and that's the state of agriculture in Kenya. Money is coming from everywhere else but
ourselves,
the commercial banking sector.
Okay, and that's a bit ironic, of course, but I know something that they do that's interesting is they use technology to reach the farmers.
Absolutely, and that's one of the things that has been the game changers. They realize that the mobile phone has a high penetration in Kenya, in Africa, and that's how you're able to do credit scoring. You can be able to assess the risk of a farmer. You can be able to communicate pricing. So I think for them, the phone has been a real game changer. Why the formal institutions can't be able to use that kind of innovation to target farmers, for me, I think it's something that we really have to ask, because the main way of getting credit into an economy is through the formal banking channel. So it's great to have IFC support, but I think I would love to see the 42 commercial banks saying, agriculture is a driver of jobs in Kenya, so let's fund it. I would love to see that day come.
As we talk about agriculture, one of the other things that was big this week was Safaricom releasing their sustainability report. And one of the greatest pointers that stood out to me was the fact that 97% of their waste is recycled or reused. And they're limiting their environmental impact in the negative sense. And also they do have M-Copper, which provides clean green energy to people. So I think they are definitely one company that is going into a lot of spaces. Of course, they're going into from mobile money, they're going into agriculture, education, and so much more. What did you make of the sustainability report this time around?
We talk about the triple bottom line. It's really, yes, you have the profits, but also what's the sustainability impact?
Yes.
What's your footprint on the sustainability map? And not many banks, not many companies able to answer that. And I'm glad to see Safaricom, the largest company in Eastern Central Africa, taking the lead and showing their peers that, yes, we need to make profit, but Africa has to be here in the next 10 years, in the next 30 years. So let's move into funding clean energy, funding clean business models, funding sustainable business models. And I think it's something that has been in the CSR dockets for most banks, but I think they're trying to move it now into more of their mainstream corporate strategy. And I think that's the game changer there.
Okay, so with that, we're going to wrap up our Week in Perspective. Thank you so much, Ken, for joining us and for shedding light on such a broad number of subjects that we covered today.
Thank you so much.
All right, well, that was Mentoria CEO and economist Ken Gishinga with our Week in Perspective on business. Today, of course, we touched on various things, but we still have more in store for you. The trading bell is coming up. Take a look at what we have in store right after the break. My name is Malika Kazia. Thank you very much for joining us. Stay right here.